Hey guys, it's a market update. Inflation is out and it is way lower than expected. This is brilliant news for Bitcoin and crypto and everyone, but there is some downside to this as well potentially. So let's look at the ramifications of this inflation number. For right now, you're seeing a huge pump in the price of Bitcoin right here, knocking on the door of 18,000 right now. You're also seeing yields just absolutely fall away. You can see this big red, this huge red down tick candle in the US 2-year. Inflation has beaten, or I should say missed. These are the inflation figures. So let's go through that and where these good inflation figures have come. Now, with inflation coming down so quickly, now you're worrying like, well, is there going to be some absolutely ridiculous recession on the horizon, right? Because if inflation is coming down so fast, you know, where's demand, right? Demand is absolutely crushed. We've been looking at these forward-looking figures in housing and everything recently, so let's go through it. But for right now, look, this is good news. This is good news for Bitcoin because Bitcoin trades on interest rates. Interest rates are a lot lower. Now the market, and its sentiment as well, the market is saying, oh, wow, the Fed is not going to raise as much as it said it would or be there for as long. The market really likes this. The Dow Jones up 800 points right now. So let's look at Bitcoin right now and how it's reacting to these figures. If you're a trader, up to $8,000 deposit bonus on BitGet plus 0 commission spot trading right now. So if you're an investor, buy your Bitcoin and crypto for 0 fees and then take it out to your wallet. Inflation came in at 7.1% year over year, but 0.1% month over month, which is this figure right here. That is dangerously close to actually being not just no inflation, but deflation. This is worrying for me, considering that these figures, if they continue, will essentially lead us into deflation, which is not good, although potentially it signals the end of any more hawkishness from the Fed, who have basically at this point what looks to have completely crushed the economy. That's not good, but we'll take it for what it is for right now, which is the complete end of hawkishness, right? I think that is going forward, the end of things. So expected to be 7.3 year over year, it's 7.1% and 0.3 month over month, and it's a massive beat at 0.1. Let's go through what has actually fallen off right here. So CPI for all items, 7.1. Some of the things that we want to be looking at for right here is that sticky inflation, for example, in shelter. And you can see that that's still 7.1%, unadjusted 12 months. Now, we've seen what's been happening with rents and with house prices. That takes the longest to feed through into inflation, but we know that's coming down. And so for now, where is the inflation in the economy anymore, right? Because that's going to be coming down, and that is the longest through into inflation. When you're looking at other aspects of inflation, you are seeing used cars just fall off a cliff, and we've been seeing those figures as well and been talking about those in the forward-looking data. Something else that's important is just services, less energy services. You're looking at inflation with wages and everything like that, 6.8. Again, it's too high. It's way above what the Fed want. But we've seen, you know, job losses are starting to tick up as well. So this is really the first time we've seen the data come in that the economy is massively reacting to what the Fed has done. So what we actually saw here as well, which I'll look at, is an analysis from, I think this was JP Morgan. JP Morgan, about if inflation was going to come in between certain figures, what they think the probability of that would be and what the S&P 500 reaction would be. So 7 to 7.2, which is what we got, they think the probability was 15%, right? So this is a massive miss of inflation, or a beat, if you want to say that, because that's obviously, you know, what we were looking for. They think the S&P 500 reaction will be up around 4 to 5%. So put Bitcoin and crypto on that as well, and obviously you're seeing a massive reaction. It looks like the recession is coming pretty fast, right? Because as we know, this is going to continue in this fashion. And as we can see from the yield curve right here, it has predicted every single recession there has been over the last 7 recessions, and we are inverted once more. So each time the 1-year, 10-year spread on treasury yields is inverted, which is what we've got right here, that is predicting a recession at some point. Each time it's done that, the last 7 times we've had a recession after, and you can see how inverted we are right now. It's an absolute mess. This is worrying for me because yes, we might get a short-term bounce going into next year, it looks like corporate earnings are going to be a disaster. What this is potentially doing is bringing down the terminal rate of interest that the market thinks, and also bringing forward the date where they either pause or start cutting. So that's what we're seeing now. And it looks like this is the data that has actually shown that. Now, what happens to the stock market and then Bitcoin when that happens? So as you can see, this is a Picasso painting from Fidelity right here of every time that the Fed has stopped, right? So a tightening cycle and then they pause or stop. What happens to the stock market? Sometimes it goes up, sometimes it goes down. So unfortunately, we can't really predict anything from this data. But what you can see genuinely is this orange right here. This is S&P 500 earnings, and it has a very high probability of still coming way down. That is the recession that I'm worried about now. Now, if you're invested in stocks, what you could be looking at is the stocks that you're invested in earning way less money. Now, when a stock earns less money, the valuation you give it has to budge. Either the valuation comes down along with those earnings, or the valuation comes down with those earnings, plus paying a lower multiple for those earnings. That's going to have to be worked out in the stock market. A little bit different for Bitcoin, because Bitcoin is so far along the risk curve. It really just trades on rates itself because it has no earnings. It's a commodity. And so even though I think earnings coming down is not bullish for Bitcoin through the medium term, we still have rates coming way down and expectations coming way down. And the quicker that the Fed flip, the lower interest rates become terminally in terms of what they are set at. That's all bullish from a market's perspective for BTC. I like to focus on the long term when we have strong short-term data like this. I prefer to focus on the long term. Why I hold BTC and why most people hold BTC is because of this chart. This is the federal government current expenditures interest payments. This is what the US government is paying out in interest on debt right now. This is a debt spiral. This is a big problem. And we know that they are going to have to pay this off, or at least prevent the debt spiraling out of control. And the way they do that is through financial repression, which is running the rate of interest above the interest that they pay on their debt. And that is good for hard commodities like many things, but Bitcoin is that financial asset that I use to protect against this. I don't think we need to get too carried away short term because, like I said, stocks going down with lower earnings, it's not really bullish for BTC. For right now, we are actually testing this resistance right here around 18,000, as you can see. So we're still in long-term downtrend. We are still in lower highs, as you can see, but this is a big print. And I think the market is going to start to price in a lot of different types of things, more, kind of an easier financial conditions. And so what you may see is we break through this very, very long-term resistance right here and turn it into support around 18,000. That's good for short-term traders. Long-term, I would prefer to be buying at a lower price, but hey, that's that. If you want to get a deposit bonus, if you are a short-term trader, up to $8,000 on BitGet, 0 commission spot trading as well, so you can buy BTC or crypto and then take it out to your wallet for safekeeping. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.